Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks surged on Monday, bouncing back from Friday's rout after President Trump played down the escalating US standoff with China, saying it all will be fine. And as a result, stocks were very bullish. In fact, the only red we saw were defensive sectors that were green last Friday. For example, consumer defensives, fairly red across the board. Procter & Gamble, Philip Morris, Coke, and Pepsi. You can see the growth component here, Walmart, Costco, of consumer defensives in the green. Telecom services were actually pretty red. This is a defensive sector. And healthcare, some were red, especially the drug manufacturer names. The health insurers were actually fairly positive as well. And all in all, we saw bullish momentum across the board in the mega caps: Tesla, Amazon, Apple, Microsoft, Nvidia, AVGO. Semiconductors, very, very strong. AVGO up 9.7%. We'll talk about why a little bit later on in the video. Software, really, really strong. Market move today. Financials, very, very green. In fact, every single sector was green here today, except for two, healthcare and staples. And they were actually only down 0.1 and 0.53% respectively. So still a solid day in terms of the defensive names doing well. Even in this market, you can see liquidity flowing back into the market. And as a result, gold was up. Small caps were up. The S&P 500 up 1.42%. So we didn't recover all of Friday's losses. Still a lot of work to be done. However, this does set up a good momentum for us to move higher into the end of the week with every single sector up and being led here by technology. You could see large cap value was the worst performing sector here today. And even then it was green, up 0.83% today. But large caps gained, small caps gained, mid caps gained, value core and growth. It was just a bullish market through and through. And this all stemmed off last week. Last week, there was a massive news between China and the US. It looked as if trade negotiations weren't going well. Trump came out and said he was going to implement a 100% tariff on China if certain contingencies weren't met, because China came out, that is, and said that they were going to put export controls on their rare earth magnets. China came out and accused the US of double standards over the new tariff threats, saying that the rare earth controls were necessary and defensive actions. China also said that they will take corresponding measures if the US persists in raising tariffs. China also urged the US to correct its wrong practices as soon as possible, threatening with high tariffs at every turn is not the right way to get along with China. That is what China said. And then, a few hours later, we saw China soften their tone. They said rare earth export controls are not a ban. They also said that the recent applications met regulations will be approved. They're willing to engage in deeper dialogue, and they're looking for global industrial and supply chain stability, and the relevant impact of export controls will be very, very limited. Then Donald Trump softened his tone. So we saw a chickening out by China and Donald Trump. Donald Trump came out with a tweet saying, "Don't worry about China. It all will be fine. Highly respected Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China, not hurt it." President DJT. And as a result of this ramp up in tariffs and then softening, chickening out by both presidents, markets rallied. And we also saw the AI names rally significantly. AVGO was up 9.36%, not just on the back of the news about the trade front, but also OpenAI extended a spending spree deal with AVGO, looking to deploy 10 gigawatts of accelerators. Now, I actually don't believe this number when I read it on the article. The chip order means OpenAI could spend another $350 to $500 billion on top of the roughly $1 trillion of chip deals they've already inked with companies like Nvidia, etc. So AVGO really spending. So OpenAI really spending here. We'll see how this plans out. AVGO shareholders are sitting very pretty right now. Nvidia also gained on the back of this news, and it looks like the AI trade is back in full swing. Another market mover today was Tesla, up 4.97% after its Shanghai factory Q4 begins to ramp up. Shanghai is its largest assembly facility with volumes, as it supports mainland China as well as other regions in the area. And then Fastenal was down 6.84%. It reported its earnings and it actually missed on revenue, missed on earnings. However, the year-over-year metrics grew 11% and revenue actually accelerated. This just goes to show that the stock was, I would say, priced to perfection. And it's just taking a little bit of a breather right here as the estimates catch up with the price action. But all in all, a fairly solid quarter if you just look at the numbers as it is. But yeah, the stock just priced a bit too highly there. I don't think this is going to be what earnings season is going to look like. I think this was just an industrial specific sector with accelerating revenue growth. And that's actually what you want to see as it pertains to the manufacturing sector of the US as a whole. This is a bellwether for what's to come. Not specifically the stock price, but in terms of their earnings. And then when we look at everything we saw today, there was 4,600 advances, 1,700 declines. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 up 1.53%. Market momentum saw a little bit of a gain today. We retook the 100-day moving average, right? But that was about it. We didn't see tangible improvements in the 5-day, 20-day, and 50-day, and we're still holding on to the 150 and 200-day. So telling us longer term, this market is still a buy. Now, guys, looking at the charts, you can see equities are very bullish, but actually leading the charge is these higher beta names. The Russell 2000, for example, up 2.78%, but mid caps are gaining. Big tech is gaining. The equal weight is up 1%. Growth and value both are gaining. The S&P 500, you can see, hasn't recovered the entire sell-off here from this candle that we got, but we did have a solid gap up and we are moving here on Monday. When you look internationally, we see very bullish price action through and through. And even here in crypto, Ethereum up 2.38%, Bitcoin up 0.48% after both being up 10% and 4% respectively. If we actually just pull up the chart right here, you can see that Ethereum on the daily chart right here had a strong move over the weekend after we saw tensions ease. However, we did break some very key support levels right here, but hold other levels relatively speaking here. But we'll talk a bit about that a little bit later on in the video. We can see the dollar gained and the 10-year and 2-year treasury yield fell. Good for real estate stocks, good for rate sensitive stocks. Don't forget, guys, we do have an FOMC coming up. Volatility did tick down, and then gold was up 2.3%. Very solid move today along with silver. So these continue to just the basement trade continues to just power along. But let's actually go ahead, talk about the S&P 500. 1.58% today. If you look at the weekly chart, you can see very solid momentum, right? We had a little bit of movement here, but again, after the softening, at least with Donald Trump and Xi, you can see a gap up here on the weekly. And if we go to the daily, it just looks like a gap up and a move. It looks like we are still trading at this range and we're not quite at the high. So there is a little bit of work for the bulls to push us into the rest of the week. I think the market is probably going to take this one day at a time. And generally speaking, bottoms for markets tend to be events and tops tend. And generally speaking, when you look at sell-offs, right, sell-offs tend to be very sudden, whereas like rallies tend to be like drawn out. Like bull markets tend to last a very long time. Sell-offs tend to be very quick, as you can see right here, guys. And that's exactly what we're seeing today. So don't be surprised if we just keep doing this for the rest of the week. Maybe we do a bit of a digestion tomorrow and then we just continue the move higher here in the S&P 500, potentially back to all-time highs here in October or Uptober, as they like to call it. The Nasdaq 100, very similar situation, massive sell-off, and now we're rebounding back to these levels right here. Again, not quite at the highs, but we're slowly but surely getting there. Russell 2000 looking a bit better, retracing, I would say, up to 80% of the fall we got on Friday, up 2.81%. If we look at the RSP, not quite as strong. So it looks like these tech names, so it looks as if it's sort of like these tech names and these smaller cap names that are really outperforming, and then sort of like the mid caps and the equal weight S&P 500 are in between. Internationally, stocks will still look really good. These are European stocks. I mean, if European stocks pull back to this 555 area and use this as support, that would actually be bullish for us to probably continue higher into the rest of the year. European stocks look really good, especially if you just look at this chart, right? You have just higher highs and higher lows being set into all-time highs last week. I think European stocks look really good. Pull back to 555 and then onward and outward. China stocks, you can see here's the massive pullback. It looks very similar to the S&P 500 in terms of the price action. We've retraced some of it, but not all of it. This is the 52-week high, by the way. So I think we probably go there and get that 52-week high. China stocks did take an absolute beating. If we look at the ISRA ETF, similar situation. That's an all-time high. We probably will go ahead and reach it. And then if we look at the India ETF, yeah, this doesn't look too great. You could see like we're making lower lows on the way down. So we probably do go lower here for this ETF. It is probably a little bit overvalued and the earnings growth is not really materializing in the region there in India. Looking at crypto really quickly, guys. Bitcoin holding this 109,000 level right here. We did get to the lows of like 106 after the tariff news on Friday, but they are rebounding, not quite as strong as Ethereum, but Bitcoin is rebounding, holding this key support level, and this is probably the place where you want to get long, looking for us to move higher into the end of the year. Ethereum right? Ethereum looking very, very crazy now. If we actually just go ahead and adjust this right here, you can see that we use this area of support right here. Let's actually just go ahead and change this color really, really quickly. You can see right here, we use this area of support right here and this area of resistance right here. So it does look like we are holding in this range. Ultimately, what we want to do is move back up to this range right here. That is what we want to do. And then we'll make the next move. If it's to the downside or to the upside, it is to be determined. That being said, we are in this range and it does look like it is holding very, very solidly. I just still do think we're going to see like 6,000 Ethereum before the end of the year, leading to a massive Q4 run, but not without volatility. And this is the type of volatility you just have to endure in the crypto space. We do get a lot of it, and that is the name of the game. Because I am expecting a massive Q4 run, a stock that I am actually quite bullish on is BMNR, Bitmine Immersion Technologies here, guys, as you can see. Now, this chart actually looks fairly bullish because you can see we put in a low right here, higher low, higher low. Looks like we're putting in a higher low in the context of making a high. And then actually, yes, we did put in a lower high, but we did actually go ahead and make a higher high just last week in the context of a higher low. So this means we are clearly in an uptrend, as you guys can see right here. So we're in an uptrend, put in the low, and we're going to have trend continuation to take out these highs. But I do think we could potentially see $70 BMNR before the end of the year. And guys, diving into sentiment, we continue to remain here in the fear zone. We saw a mild uptick from slightly on the precipice of fear, extreme fear, into slightly more the middle range of the fear zone. The markets are still a little bit uneasy after what we saw on Friday. Tariff fears coming back into the market, and that is why we're still hovering here in the fear zone. However, if the momentum continues and if we continue to brush aside the so-called taco trade, we will move into neutral, we will move into greed as we enter Q4, because Q4 tends to be a fairly positive time frame. And even when we do look even just a week or 2 days out, after the S&P 500 has had a 2 to 5% down day from a 10% quarter, we actually tend to see fairly positive stuff. If we look 1 day out, average returns pretty much flat, but the second we go 5 days, 21 days, and even 63 days, pretty much 3 months or to the end of the year, you're looking at returns of 4.87%. So ultimately, guys, the data tells us that when we are in a bullish environment and we get pullbacks like these, we should probably just go ahead and buy that dip, especially because a lot of this was headline driven. It wasn't fundamental driven. And generally speaking, you'll see mild corrections, but the market will scoop up those dips very, very quickly. We do also know the macro looking very favorable. Atlanta Fed's GDP now Q3 sitting at 3.8%, very solid stuff. And the labor market, guys, I've been talking about this for a while. The labor market is officially bottoming. We saw bottoming out here in early October, the 3rd of October. We're now looking at 7.9% federal tax receipts. So it looks like a lot of the weakness that we saw was less of a weakness and more of just normalization from what is very tough comps. I think the labor market probably has bottomed, especially with non-farms. When you look at stuff like the ASA index, that is rebounding as well. That's a leading indicator for non-farms. And I do think we probably are going to see non-farms pick up into the end of the year. And that is going to continue to support the momentum that this market has. Now, looking at earnings, a lot is going to come down to earnings. And with all the government shutdown, we're not going to get a lot of the data prints that we will this week. So the market's really going to move on this. And ultimately, it starts tomorrow before the open. We have JP Morgan, Johnson & Johnson, Goldman Sachs, Wells Fargo, BlackRock, Citi, Domino's Pizza, Fastnell here on Monday before the open. They already reported. Now, guys, don't forget, these are big names. These are big money center investment banks, and they really have a good grasp on what the corporate and consumer components of the market are looking like. We also get a couple of the big semiconductor names, ASML, TSMC. We have a couple of the big brokerages, IBKR, as well as Charles Schwab, American Express as well. So very, very big names. A big week of earnings ahead. Data, so-and-so. We'll see how the data goes. PPI data and CPI on Thursday. Retail sales. I don't know if we're going to get this with the government shutdown. Jerome Powell is speaking tomorrow. So this is probably going to be the biggest thing of the week, unless we get some sort of a deal and we actually get these data prints here with the government shutdown, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.